Good afternoon, everybody, and welcome to the panel that we're going to be discussing AI and taking a bite out of financial crime going forward. And I'd like to start, should be a good session. I'd like to start by introducing my three panelists with me. My name's Steve Lurie, and I'll be the moderator. But I'll introduce the three panelists are Amy Barbieri, David Excell, and Sultan Meghji. And I'd like, Amy, why don't you start off introducing yourself, and then David and Sultan, and then I'll wrap up with a brief introduction of myself. But Amy, please go ahead.
Sure. Hi, Steve. Thank you. My name is Amy Barbieri. I am president and co-founder of Vital4. We're an AI-driven data technology screening and monitoring platform that delivers and supports BSA and AML compliance.
David?
Steve, my name's David Excell. I'm the founder and I lead our US business here. And I lead the US business for Featurespace based down here in Atlanta. Featurespace provides enterprise financial crime solutions for financial institutions, banks, and payment processors using adaptive behavioral analytics to look at transaction screens, to look at applications for new customers to help identify both fraud and suspicious activity for AML purposes.
Thanks, David. And Sultan?
Hi, I'm Sultan Meghji. I'm the co-founder and CEO of Neocova. We provide AI and cloud-based banking core and other analytic and anti-fraud technologies for US banks and the regulatory community.
Thank you to all three of you. I'm glad you're here to lead the discussions. My name again is Steve Lurie. I am with Dixon Hughes Goodman LLP, headquartered in Charlotte, North Carolina. The firm provides assurance, tax, and advisory consulting work. I am the leader of the anti-financial crimes practice at DHG, and have worked since September 11th of 2001, have worked with banks, broker-dealers, some funds and advisors as well on implementing AML programs, performing transactional lookbacks, OFAC lookbacks, and doing KYC remediations for primarily banks and broker-dealers, and also performing AML internal audits. So with that, what we plan to do is we've got a series of questions regarding how AI is coming into the anti-financial crimes environment and how it's going to help and move forward financial services institutions to solve better their financial crimes issues and making their programs more effective and efficient. And so we've got a series of questions that I'll run through. All the questions, I'll run through each one of the panelists, and we'll see where that takes us in the discussions amongst all of us. Let's start off. Before we start with the first one, though, we have two polling questions just to get a feel from the audience how much they have been or will be using AI in the right now or in the immediate future. So if we could pose that first question to the audience. I hear it's been posted. Now we'll just wait for the results. And why don't we do this, as we're waiting for the results to come back in, depending upon how quickly the audience responds to the questions as they arise. Amy, why don't you start off with our first question, which is, how do you see legacy technology firms, how do you see them faring versus the opportunity for AI monitoring for suspicious activities? How do you see it going forward?
Oh, sure. I will be happy to take that question. It's a good one. I'll start out by saying that, I live in the data world. So, for me and my conversations with customers and banks, the number one pain point in the industry, and I think a lot of people on this call would probably agree with this, is false positives and the abundance of information that folks have to sort through and to remediate that data. So, and I think AI has an incredible opportunity to enhance several different things for financial institutions, transaction monitoring, due diligence, sanctions screening and remediation, entity resolution. There's a lot of places where there's an opportunity to really enhance that. But with respect to legacy providers, especially when we're talking about this kind of critical data, I will say that they definitely struggle with old band-aided architecture and systems, and it inhibits their ability to put forth the most relevant data, and having the most relevant data ultimately cuts down on those false positives. So the reduction of that noise, the timeliness of data, the ability to really do a name match search just beyond the fuzzy name matching that we've seen in the past. So, there's a lot of disadvantages when you don't adopt those technologies, especially when it comes to those pain points that we see from a data perspective.
That's great. I'll continue, at least from my screen, clockwise. Around the screen. David, do you want to go next and give us your thoughts on this for 2A?
Yeah, and definitely. And I think also a lot of sort of legacy platforms have been built when AI and machine learning wasn't as much of a requirement for customers. So definitely what we've been able to build at Featurespace, it was with machine learning at the forefront, and that's what we built for. And then we added in a lot of the other capability, like a rules engine alongside that machine learning platform. And then I also think that machine learning also gives a different way of looking at the problem. So a lot of machine learning or rules-based systems will look at what was known to be bad in the past and look to re-identify that same pattern potentially more accurately to reduce those false positives. And what we've pioneered at Featurespace is what we call adaptive behavioral analytics, which then allows us to build a profile of what good consumer or interactions look like, and then from that have a baseline to be able to identify anomalies. So it not just helps us identify fraud and financial crime, but it also then helps us identify new suspicious activity that hadn't been identified before, or potentially being able to pull that in forward. And I think also one of the other really key important points is a lot of, for us, where we focus in transaction monitoring, is that's really mainly been focused on the transaction itself. And when we're looking at enterprise financial crime solutions, we can actually look wider in terms of more data sets. So how has the customer applied for their account? Was it online or through a mobile device? What's their interaction with the call center or the branch been? So you consider a much wider array of information to be able to use those insights to be able to drive further understanding and knowledge of who the customer is and what they're trying to do.
Very good. Thank you, David. Sultan, you want to round out the conversation for this initial question?
Well, it's really easy when Amy and Dave both laid out so much of the basics, the good stuff, the data, getting the rules engines, getting ML in place, so then I'll go to what's coming and what's coming next, which is unstructured learning, which is the ability to not have traditional modeling and not have to bolt together all these systems. And all it does is highlight the fact that most of the legacy technology providers have built technology in excess of 10 years ago. And so it's a bunch of custom installed software, consultants, all that kind of stuff. And when you're talking about hundreds of thousands of entities operating in real time against non-real time systems, it's very difficult to do this. And so one of the things we do is use unstructured learning. We have a variety of different data analytics technologies that sit behind that allow us to normalize data in real time without hands-on, without customization. And so you can create a frictionless ecosystem where it isn't just the transactions, but also the internal data repositories of the core vendors, which are frankly an utter nightmare. And we have to clean through those on a daily basis. And then working all the way through to the regulators to ensure that there's a clean discussion there. And having horizontally oriented AI is the only way to do that. And so it's exciting that we're at a point now where the technologies are there and a lot of these enabling pieces are available. But the fact is if you're using a core platform more than 5 years old, it's actually more than 15 years old source code. And so it's not going to be able to do this. So you have to bolt on these systems. And for a lot of organizations, that's fine. But for the many tens of thousands, it's not. And they're getting taken advantage of. I'll also highlight that in an environment like we're in over the last 6 to 8 months, where we're seeing something like a 700% increase in financial crime attempts, this is not something that the legacy providers are able to respond to at length when, a lot of our institutions are waiting 2 years to get, simple things done. So, I think there's created a tremendous opportunity for organizations like the ones that the three panelists here represent to steal a nice little bit of market share from these legacy providers.
Understood. Thank you, Sultan. Now, to our first two polling questions, we got responses back in, and somewhat interesting on that. The first question is, do you currently use AI in your monitoring or screening activities? It's basically a yes or no answer. And we basically have about 70% not yet using AI and about 30% who are. And regarding our second question, which is, if you're not using AI as of now, are you planning to consider using it or considering it within the next 12 to 24 months? And it seems to be about 50-50 of that remaining 70% who are not utilizing it just yet. So about 50-50 of the 70% will be considering it in the next 12 to 24 months. So interesting, just to see there is, like you just said, Sultan, market share to be had, and probably more down in the future, I think, as we're all agreeing, as financial institutions become more comfortable with it and the regulators as well get more comfortable with it too.
Yeah, I'm actually encouraged by those numbers, frankly. I'm excited to see this. Those are higher than I expected. Understood.
I think, though, and please interject, all three of you, before we go on to my next query. I mean, I think as especially, we see even more different types of red flags under COVID that have been coming out from FinCEN or from the SEC regarding securities transactions as well. I think trying to keep building or revising rules and thresholds on current or recent technology, it just becomes more and more daunting, I think, to the financial institution. And somehow a better way of trying to figure this out, and what sometimes the regulators call build it out in a sandbox, and see how the systems and processes can be improved, will be helpful to a lot of FIs over the intermediate term. Not necessarily for everybody tomorrow, but coming along. Dave, would you agree with that, or what's your thought?
Well, and I think for us, like, COVID has been a fascinating test for the technology, and also for us as an organization. Like, we've had to adapt ourselves to the change in working, but also then having a real life example of, well, how does our technology actually adapt and respond to the changes of how consumers are interacting with different payment mechanisms with their bank, and what has that really meant in real life for deployments of our technology. So we have self-learning algorithms in our platform, and one of the great things that we've been able to see is our scores and thresholds have remained constant all the way throughout COVID. So it's meant that the fraud strategy teams haven't need to then go and manipulate or adjust their fraud strategies as they've seen the impact of COVID, and especially when we see the dramatic shifts of going from a 2 or 3 year acceleration for card not present transactions, with a lot more of those details going online. So for us, that's been a great testament to the technology and our teams that have put all of that together. Interesting.
All right, why don't we move on to our next question? And it's a slightly different topic, but related. How are each of you seeing the different use of AI in banking versus payment system versus central bank systems? Are you seeing its use in those areas? You know, how are you seeing its use in those three specific subsectors? And are you seeing it in any other subsectors of the financial services industry yet for monitoring of financial crimes or screening? Sultan, you want to go first?
Oh, absolutely. We see it in all three, and we're lucky that we provide it in all three. Everything from looking at real-time cyber incidents at the central bank level, looking to the creation of synthetic identity, all the way through payments, which is actually really quite straightforward. And unless you're using the dreaded S-word transfer mechanism, which we should all avoid. And then in the core banking systems, it's great that the regulators are being so open and so pro this technology, and that's been a real wind change in the last year. I just can't be more positive about the relationships we have with the 100 or so U.S. regulatory bodies that we interact with. It's just fantastic. The other areas that we see a lot of activity around, or at least growing activity, is traditionally it's been focused on consumer transactions, and as we all know, that's a tiny percentage of the overall transactional volume. So looking at it on the business and commercial side is becoming a bigger and bigger issue. Looking at these outside of siloed functions, so looking at equities, looking at all the other aspects leading into these. Synthetic identity is a big problem and going to become a bigger problem. And frankly, and it's nice to hear this from the regulators, arbitrary dollar amounts as gating factors for whether or not a transaction should be evaluated. We all know that's not real. We all know that criminals are going for smaller dollar amounts and higher iteration points and higher failure points, but there's a lot of that activity. The really nice thing is that for the first time ever, you have the ability to walk across this entire ecosystem with AI-enabled technologies, which are allowing things to learn in real time, just as David described, which is great to hear. I love hearing stuff like that. As somebody who's been in AI for almost 30 years, this use of it in the market is just fantastic. But to be able to have all of that happening in real time is great, and to see the regulators and central banks so pro this discussion, is fantastic. And there's some great new policy coming at the G7 and G20 layers that will continue to extend this.
Great. David, do you want to comment?
Yeah, no, I think for us, I guess also there's a willingness from right across the board to use AI and machine learning and the benefits that it can come. But then I think it also then becomes to the practicalities of actually deploying it, and a lot of the groundwork that needs to be done in terms of good quality data sources and infrastructure and all of those types of things to actually make sure as you're deploying these solutions that you're not just looking at it from pure technology, but also aspects of model governance and making sure those controls are put in place and done appropriately. So that's where we also see working inside those functions to ensure that the biases in the models are correct, the data is robust, looking at different failure conditions and making sure that the models are going to continue to produce the right outputs when they're stressed in very different ways. So we would sort of see more innovation in the payments and banking side, just with their ability to react a little bit more nimbly than the central banks.
Thank you. Amy, any comment?
I think I'll leave it at that. I think Dave and Sultan pretty much covered it for me.
No problem. Sounds good. One question I have that's coming up, because I think one or two of you may have mentioned this in this discussion, is the lovely idea of model validations, which, as we know, from the OCC and Fed's point of view, it's especially on AML and sanctions, it seems to be an annual necessity. How do you each see, and of course, many large institutions have their own quote unquote model validation departments, almost functioning like a third line of defense, similar to internal audit, but looking at, while being mostly in the second line of defense, but they're looking at the validation of the models. How do have each of you been running into, let's say, model validation units at large, financial institutions along the way? Just curious, either Dave or Sultan or Amy, go ahead.
Well, neither of them are going to jump in. I think it's great to see it we're seeing it at the bigger institutions, but actually at some of the mid-sized institutions. And we're seeing them hire data scientists who aren't just really high quality data scientists, but also domain experts. And so they really do understand this, and they've brought together really nice tiger teams, including BSA officers and people like that. So that's one area that I've seen this remarkable acceleration of the validation of what they're doing, and it ties into the automation that comes with systems like this, where you don't have to have hand on keyboard for all of this, which is an evolution for many organizations.
Yeah.
The other one that I think is really interesting is to watch, especially the Federal Reserve and FDIC jump in wholeheartedly with their own internal AI and model validation groups, which are staffed by some absolutely fantastic people that really understand this market quite well. So even if you're spending a lot of time, having to kind of explain the technology, the fundamental value proposition of it is being understood from day one, which is fantastic. So for people like all of us who are trying to push these technologies into the market, to have that kind of open support and capability of responding in very short amount of times is just wonderful.
Gotcha.
And I'm not affiliated.
Yeah.
I was just going to say, I'm not affiliated with the Federal Reserve. These are my comments and my comments alone. And anyone who's working with that understands the disclaimer there.
Understood. Dave, any other thoughts on this before we move on?
I guess I've seen a trend recently where there's a lot more knowledge in those groups around AI and machine learning, and there's also a very big spread in terms of some organizations consider just a tweak to a rule to need to go through model validation compared to actually deploying a brand new machine learning model. So I think there's various levels out of scrutiny in different organizations, but also from a good perspective is there's a growing level of understanding, especially when you're going from static solutions to adaptive solutions, and how you then monitor and have the appropriate reporting and also testing in place. So it's often hard to test some solutions without looking at production data. Test data isn't often representative of what you're actually going to see. So being able to have technology in place that makes that process as simple as possible, I think is key to them being very responsive when you're actually deploying these solutions and being able to react to different circumstances.
Very good.
Exactly right, Dave. Could I just throw in one other thing, which is, the ability to go through one validation with one regulator, with one customer, and then just by having done that once to then be able to roll it out across an entire segment is something that we're now able to do, which is wonderful because of the determinism, by still maintaining determinism in the algorithm set, which is just great. And so it's wonderful for I think those of us in the market pushing this to be able to say, well, here is the review we did on X date with Y regulator, and then it rolls across the rest of the ecosystem, and that dialogue is becoming so much more robust that it makes it, I think, easier for everyone.
Excellent. All right, let's move this out a little bit more internationally on my next question. Are you seeing any differences, and if so, what are they, in the acceptance and implementation of AI in the US financial services industry versus the FS industry in other locations in either Europe or Asia? Dave, you want to go first?
Yeah, I think from most leading jurisdictions is we're seeing the need for AI coming through, and it's being asked more and more from the regulators. I think probably the only real exception, which is probably a positive exception for us, is Japan, which is now mandating AI and machine learning in a lot of those systems. So if that continues to go forward, that's all the better for all of us on the panel.
I'd imagine so. It's always good to have a government regulator pushing everyone along.
Yeah.
Sultan, you want to go next?
Well, I think, we're all playing catch up to a degree with what's happening in the PRC, and, given the centralized nature of the Communist Party there, it's easy for them to push stuff out at scale. And so, we obviously see that, quite in a quite leading environment. Europe, obviously, from a policy perspective, is really quite far forward as well. And I think it's, a hodgepodge of everything else. We're seeing some really interesting stuff happening in Africa, especially around payments. That's really quite interesting. But, I think until my one comment to wave the flag a little bit is, I think until you see the US and the EU mandate adoption of adaptive technologies, especially, deep learning style artificial intelligence, we'll always lag just a little bit what's happening in CCP controlled PRC.
Would you think, Amy, before I get to you, now that you said that, I'm wondering, I know that the regulator, when they quite often when they go from institution to institution and they see a new control put in place at a certain financial institution that they really like, they start raising the bar for everybody. Do you think, I don't know, maybe if not the near term, the intermediate term, they may start doing that with AI versus legacy technology for transaction monitoring or screening? I'm not saying they will do that, but I'm just using some historical precedent, if you know what I mean. Amy, if you want to comment or.
Yeah, I mean, I think it's really interesting. There's a lot of, heavy recommendations, right? We saw that a couple of years ago come out with a statement from the Federal Reserve and FDIC and FinCEN and so forth, heavily recommending, financial institutions to take a hard look at, at the private sector and what we're doing with technology and how we can help enhance their BSA AML framework that they already have in place. So that was a strong recommendation. And I think, there's an expectation kind of set forth with those types of things. I mean, not just here, kind of the same thing in Australia with Austrac and in the UK with the FCA. So yeah, I mean, I think, we might be going in that direction, and and certainly anybody here on this panel who has been developing AI for many years for this purpose alone, it wouldn't be a bad thing. But yeah, I know that that might not be well received. But yeah, I think we're definitely going in that direction.
Okay, sounds good. Why don't we move on? Are within the banks or within any type of subsector of the FS industry who are implementing at the moment AI, are you seeing a merger of resources amongst, let's say, fraud and FIU units, AML units, or between fraud, AML, and cybersecurity units as AI starts being implemented for all types of anti-financial crime? David, you want to go first?
No, definitely. We definitely see this as a trend in terms of what we're seeing when we're looking at requirements that are coming, especially from the banks, where I guess historically those have been very separate groups between cybersecurity, fraud, and AML. But I think now we're seeing sort of the investment into a single technology platform that helps sort of pull all of that together, as well as the skill set required. A lot more fraud is a lot more cyber based, so we're seeing that come through. And we're also then seeing that same data and explanations going through into the AML. So where one platform can be used to leverage the understanding of the customer or of the business that is transacting, it makes sense to be able to pull all of that information together. I think they're still operated as different business units and silos. So there's still a lot of work to happen, even when you're looking at sort of testing the platforms and doing upgrades separately for maybe a fraud team versus an AML team. So there's still a way to go, but I definitely think it's the direction of travel for a lot of large financial institutions.
Sultan, you want to go next?
Happy to. Yeah, I think, Dave's highlighting it really well. And so I'll just agree with everything he just said, but then also say that for us, the leading organizations are the ones where AML, fraud, kind of all the business functional sides have a degree of unification. Cyber is what we would then add on to call it best in class. And it's really exciting to see some organizations actually start to pull people from their cyber organization in, and you see that. And we're seeing a number of organizations where you're starting to see cyber vectors feed directly into those parts of the organization, which is great. But I think, to reiterate Dave's point, I think the majority of organizations, we're seeing cross-functional teams, kind of tiger teams, or whatever you want to call them, established. The business units stay separate because, I mean, let's be honest, 9 months ago, the number of organizations doing this in the United States could probably be counted on two hands. Now it's, hundreds, and that's just how quickly this market is growing. And so I think a lot of the digital transformation journeys that so many FIs are going through right now to catch up on the last 15 years, there's the organizations just haven't really turned the corner on that just yet. But it's, I'm really optimistic looking at what's changed. The other nice part about all of this is because of how open most of the modern platforms are, it doesn't really matter. Unlike the legacy platforms, it doesn't, if you have a BSA tool over here and an AML tool over there and a payments tool over there, it's fine because they're reasonably modern, reasonably well built, open. The models can be moved across them fairly easily. You get to do that. Whereas, and that allows the organization to be a little more flexible. You don't have to declare some sort of organizational structure in order to implement a technology. That's really, 2000s thinking, and we don't have to do that anymore.
One thing I we were talking about the increasing leveraging and combination between cyber, AML, and fraud, and all the recent FinCEN advisories that have come out, tying all three of them together on a lot of the more recent advisories during COVID. I think even, makes that point even more because they're showing that all of these bloody things are all sorrowful events. The last area that I'm curious in that I don't know if I think in some of our preliminary discussions amongst the four of us, I'm still waiting to see if they get tied into it at some point, will be on the broker-dealer side with trade surveillance for capital markets items that are potentially suspicious activities. That still seems to, unless the three of you think I'm off base, still hasn't quite occurred yet, but are sorrowful events. And maybe that will happen at the broker-dealer side of large financial institutions. Any of the three of you, Sultan, Dave, or Amy, you can respond. What are your thoughts on that side of the FS business?
I think you're dead on, Stephen. I think, what we're seeing is, especially in the last 36 months or so, between what FinCEN is seeing, what's happening through CFIUS as well, and what the SEC is highlighting is, I would be very surprised if 10 years from now, every single money movement and every single asset landing platform didn't have some version of this attached to it. There's just so much bad behavior going out there, and I think that's the real learning of this FinCEN leak is that there's just so much bad behavior, and it's only capturing a tiny percentage of it, right? I mean, the bureaus, our FBI. I talk in acronyms, I apologize, but the FBI is highlighting.
We all do.
Yeah, the FBI is highlighting, tens of billions of dollars a year of U.S. assets that are being transferred outside the United States illegally. We're seeing that 24% number about financial crimes that got thrown around. This is all growing. The criminals are finding new and interesting ways of doing this, and so we'll continue to see this extend across everything. I think broker-dealer is the natural next place to go. I think real estate will end up being not too far behind that as well.
Understood. I'm going to ask our Sashi, who's assisting us on the polling questions, if he can, to send out the last one or two polling questions that he has available to the audience to see if they could respond. I know one of them covers what is the size of your AML alert and sanction screening due diligence staffs combined? And if we have time, the last one might be on, are you seeing, what percentage increase are you seeing in fraud-related suspicious activities, regardless of what legal entity it's occurring inside your institution? So he'll send those out, and I know from the first two, we'll keep proceeding on with our discussion because it takes a little bit of time for the responses to come in. So why don't we move on? Next question for the panel. How is AI affecting financial institutions in increasing efficiencies and reducing operational costs in areas of AML alerts and sanction screening due diligence teams? Is there value being created now, or is it still going to be down the road? Amy, you want to start with that one?
Sure, absolutely. Kind of falls into my wheelhouse there. Going back to what we were talking before in the first question, AI is key technology, right, to get rid of that unwanted noise and reduce those false positives. So I think we'd be remiss in not kind of talking about the investigation process, right, and how AI can really successfully augment that process and provide insights and into, and for the analysts to, drive key decisions and drive them quickly. Again, the more accurate decisions we can make in the less amount of time, the more efficient the process can be. And I know it's just a huge pain point. So again, it goes back to those technologies being able to be adopted and implemented in this process. And, it's interesting. We talk about AI and, I haven't been in it for as many years as Sultan has. So, but I will say when we first started building out AI into our data collection platform, we had a lot of interesting conversations with people around, what that meant and, kind of how scary that was. And the question of, is it going to replace people? And, in this instance, and I can't just speak to every instance in AI as applied, but in this instance, it's not going to ever fully replace, I don't believe, ever going to really fully replace an analyst who's really trying to deliver this information. However, I do think it certainly has to cut down on the frustration of their job and filtering through this massive amount of information and really make them more, just more effective in what they do. And so, for financial services or institutions that are seeing, a 90% plus, false positive rate in their suspicious activity alerts and, in their sanction screening process, this again, it's just key to addressing that major issue.
Dave, you want to go next?
No, definitely. I see there's quite a few values already being created. So part of it is the reduction of false positives. And I think Amy touched on a really important point there is there's a part of job satisfaction is you don't want to be there as an analyst just going, no, it's another false positive. You actually want to be genuinely investigating suspicious activity or fraud. So where you can bring that to the front is really important. And I think not thinking of machine learning as just a black box. So how you build explainable solutions that also then guide the person who's investigating the alert into where the actual suspicious behavior was to help them understand that, and also the operational efficiency of where that alert can then be routed to the appropriate skill set within that team. And also there's the false negative. So it's not just around reducing the noise, but it's identifying things that may have been missed by traditional strategies. So we've seen occurrences where we've been able to bring alerts forward in time because we're not based on just looking at basic thresholds, where you can look at genuine suspicious activity that may not have triggered those thresholds so far. You can bring that activity in earlier to make sure that it's being captured in a more timely fashion.
And Sultan, you want to add in your thoughts?
I would just say that, there are entire classes of transactions that shouldn't touch a human's hands. And in most FIs in the United States in particular, you still have people hand on keyboarding for 10, 15 minutes, and 80-90% of those don't need a hand on keyboard. So let's get rid of that. There isn't really a one size fits all solution set here. And so for some stuff, it's rules based. For some stuff, it's just pure automation. For some stuff, it's artificial intelligence. There are a variety of different things here. And I hope that the people listening to this get a sense of where state of the art is. It's not just in terms of making the analysts' lives easier, but also removing things that would hit their desk and broaden it out. Most of the processes these organizations use were invented in a time when the average person's account had 20, 30, 40 transactions per month. Now we're talking hundreds per month. And we're looking at different transaction types and different payment vectors and e-commerce and all this other stuff. And so there is this very heterogeneous set of capabilities that need to be brought. And it's exciting to see this, but I think it will at some point become a point where humans won't be able to touch 99% of it. And that's coming very quickly, possibly today.
Interesting. Well, rather quickly, I just wanted to mention we got responses back on our last two polling questions. I know we're almost out of time. In terms of the size of AML departments, they're just about everybody, nearly everybody said they're still in the, between AML and sanctions, they're still in the 0 to 25 range in terms of number of staff, which is still quite often can be a cost item for an institution. And in terms of percentage increase, related to what they're seeing in fraud this year for suspicious activities across, regardless of type or legal entity, it was roughly evenly split. About some of the respondents have said they've seen an increase of about 11 to 25%, and the other half more than 25% over the past, between 2020 and 2019. Not surprising as well on both of those from what I'm seeing. I've just been advised we have now less than a minute to go. So I firstly want to thank my panel and for their great input and help and assistance in preparing for today's session. It was super fantastic. And for the audience, I'd like you all, thank you for attending number one. I hope you found the discussion and conversation useful to your needs. Number one, I hope you thought I'm glad you all were able to respond to the polling questions. And again, thank you to all my panelists. And I guess that's about it for now. Unless anyone has, unless there's anything else at the moment to discuss. If not, thank you, everybody.
Thank you, Stephen.
Thanks all.
Thank you.
Thanks, Stephen.
Bye-bye.
See y'all later.
Bye, everyone.
Bye-bye.